You're HODLing Bitcoin. You believe in the tech, the future, the digital gold narrative. Fantastic. But let's be honest, watching that number just sit there, while charts explode elsewhere can feel agonizingly slow, right? Especially in the hyperspeed world of crypto in 2025. You hear whispers of traders doubling their stacks, catching lightning in a bottle. You wonder, are there secrets to faster Bitcoin growth beyond just holding on for dear life? Yes, there are. But fair warning. These aren't gentle HODL strategies. This is active trading territory. It's potentially explosive, incredibly demanding, and absolutely bristling with risk. Think you're ready to look beyond the HODL? Prepare for a reality check. First, let's acknowledge the HODL. Buy Bitcoin, secure it. Forget about it for years. It's simple, proven effective long-term for many, and requires minimal stress. If that's your jam, awesome. Stick with it. Active trading, however, is a different beast entirely. It's stepping into a volatile arena where you actively try to profit from Bitcoin's relentless price swings. The potential rewards can be higher, faster. But the potential losses? Catastrophic. Before we even whisper a strategy, let's get the mega warning out of the way. Active Bitcoin trading is extremely high risk. You are competing against professionals, sophisticated algorithms, and whales who can move the market with a single click. Bitcoin's volatility is legendary, double-digit percentage moves in a single day are common. You can lose your initial investment, and if you dare touch leverage, trading with borrowed money, you can lose significantly more than you started with, owing money you don't have. The psychological pressure is immense. Most people who attempt active trading fail miserably. This isn't financial advice. This is a look inside a dangerous game, and honestly, it's probably not for you. Still here? Okay, you were warned. Strategy 1. Swing trading. Riding the Bitcoin roller coaster. Swing trading isn't about frantic minute-by-minute trades. That's day trading, an even faster way to lose money. It's about capturing the medium-term swings in Bitcoin's price that play out over several days or weeks. The basic idea: identify the current trend, up or down, wait for a temporary pullback against that trend, look for signs the pullback is ending and the main trend is resuming, then jump in. You ride the swing until it shows signs of weakening near a resistance level, if long, or support level, if short, then you hop off and wait for the next setup. How do swing traders attempt this? Primarily with technical analysis, reading the charts. They identify key support levels, where price tends to bounce up, and resistance levels, where price tends to stall or reverse down. They use moving averages, like the 50-day or 200-day, to gauge the overall trend direction. Indicators like the RSI, Relative Strength Index, help spot if the market is overbought, maybe time to sell, or oversold, maybe time to buy. Candlestick patterns, weird names like hammers, shooting stars, or engulfing patterns, give clues about short-term reversals. It's about combining these signals to find high probability entry and exit points for these multi-day moves. The upside? Fewer trades, potential for decent gains on strong swings. The downside? You need good timing, you're exposed to sudden price gaps overnight or on weekends, and you can easily exit too early and miss a bigger move. Strategy 2. Trend following, going with the flow, even if it feels wrong. This strategy is conceptually simpler, but psychologically brutal. Trend followers don't try to predict tops or bottoms. They don't care why the price is moving. They only care that it's moving decisively in one direction, the trend. Their job is to identify that trend and just follow it. If Bitcoin is clearly grinding upwards, they buy and hold. If it's clearly crashing downwards, they sell, or even short sell. They typically use longer-term indicators like the 200-day moving average. If the price is consistently above it, the trend is up. Below it, the trend is down. They might enter on a breakout to new highs or lows, or on a pullback that holds the trend line. The beauty? It removes prediction. You just follow the market's momentum. During Bitcoin's massive bull runs, trend followers who held on made fortunes. The agony? Trends don't last forever, and markets spend a lot of time going sideways. In choppy, directionless markets, trend followers get slaughtered by whipsaws. Buying near a high just before it reverses. Selling near a low just before it bounces. Getting stopped out repeatedly for small losses. It also means you always buy late, after the trend is confirmed, and sell late, after the trend has clearly broken. It requires incredible discipline to stick with the system when your gut screams, "This has gone too high," or "This has fallen too far." Strategy 3. Range trading, playing Bitcoin ping pong. Sometimes, Bitcoin isn't rocketing up or crashing down. It gets stuck, bouncing between a well-defined price ceiling, resistance, and floor, support. This is a trading range. Range traders love this. Their strategy is simple. Buy when the price hits the support level at the bottom of the range, and sell when it hits the resistance level at the top. Rinse and repeat. Tools for this include drawing horizontal lines on the chart to mark the range boundaries and using oscillators like the RSI or stochastic to confirm if the price is overbought near the top or oversold near the bottom, increasing the odds of a reversal back into the range. The advantage? Clear entry and exit points, works when trend strategies fail. The lethal danger? Ranges always break eventually. If you buy at the bottom expecting a bounce, but instead, the price crashes through support, you're caught. If you sell at the top expecting a drop, but it blasts through resistance, you're squeezed. Identifying valid ranges and anticipating the eventual breakout, and being ready to get out or flip your position, is critical, and incredibly difficult. The absolute must-haves: risk management and mental fortitude. Forget the strategies if you don't master this first. This is survival. 1. Position sizing. This is paramount. Never, ever risk more than a tiny fraction, say 1% or 2% max, of your trading capital on any single trade. If you have $10,000 to trade, a 1% risk is $100. This means if your stop loss gets hit, you only lose $100. This prevents one bad trade from wiping you out. Calculate your position size based on your entry point and your stop loss level before you place the trade. 2. Stop loss orders. Non-negotiable. Before you enter any trade, you must know exactly where you will exit if you are wrong. A stop loss is an automatic order placed with your exchange to sell your position if the price hits your predetermined invalidation level. It takes the emotion out of cutting losses. Honor your stops. No exceptions. 3. Leverage. Trading with borrowed funds. Magnifies profits and losses. Exchanges offer insane leverage like 100x. For 99.9% of people, especially beginners, high leverage is financial suicide fuel. It drastically increases your risk of liquidation, your entire position being automatically closed at a loss. Avoid it or use extremely low leverage, like 2x or 3x, with extreme caution and understanding. 4. Psychology. Trading messes with your head. FOMO makes you chase pumps. Fear makes you sell bottoms. Greed makes you hold winners too long until they reverse. Revenge trading after a loss makes you take stupid risks. You need a written trading plan with clear entry, exit, and risk rules, and the cast iron discipline to follow it, even when it feels wrong. So, looking at the Bitcoin market in mid-2025, is active trading the secret path to riches? The volatility is certainly there, providing opportunities. The recent ETF inflows have brought more liquidity and potentially new market dynamics. But the core reality hasn't changed. Active trading is a relentless, high-pressure endeavor requiring immense skill, time, and emotional control. It demands mastering technical analysis, understanding market structure, managing risk religiously, and constantly learning. The vast majority who try, lose. HODLing is simple. Trading is complex and, for most, hazardous. Swing, trend, range, different ways to potentially capitalize on Bitcoin's wild ride beyond just holding on. They offer the allure of faster gains but come packaged with the very real probability of faster, deeper losses. The critical question isn't just can you learn these strategies, it's should you even try? That depends entirely on your knowledge, your capital, your time commitment, and most importantly, your tolerance for potentially gut-wrenching risk. Choose wisely.